In this video, we're going to talk about how we can use price action rules to help us navigate the markets. So we're looking at S&P 500 mini futures, and today's session started with consolidation. This is the first thing that I need to do my pre-market structure analysis, and you can see the overall bias is quite neutral. We're going sideways, so I already know that there is no trending market in the direction. And also what I like doing is not only analyzing the big picture, but I like to focus on the most recent structure as well, because it really looks like there's a small trend range part of this big one. You can see the supportive indicator 12-bar EMA is going completely sideways, flat. We have consistent pricings up and down, so I need to identify the support, the resistance, and I have to follow the short-term trend line rule. Break a new high, reversal, break a new low, reversal. So right now I don't expect strong trend to occur in the market. I'm just going to follow the short-term uptrend. I cannot sell as long as this uptrend is in play. Close outside, push to a new extreme. I don't think we can fade just yet because the trend range was just about to be established. In order for me to fully trust this brand new consolidation, I want to see a lower high below EMA. Why? Well, because according to trend range rules, when it comes to price action, most breakouts will fail and you want to buy low, sell high. Okay, but we can see how sideways we're going. It's quite broad. And also what I like doing is we have one leg up, break, second leg up, something like this. We didn't fully reach the measured move, but it's okay. Close is close enough. And you have one leg down here, pull back, second leg down here. Market moves in pairs of twos. So our trend played out. We're pushing back below the EMA. And now we have a lower high that is confirming fell breakout. It's confirming the trend range structure. This lower high is not fully below the EMA, but because you are exactly at the resistance, confirming the fell breakout, and our trend played out, it can be considered good high probability setup because our trend played out, break below, resistance is holding, and we're heading all the way to the bottom. And market traded all the way down like this. We have a small break, push to a new extreme. Now, I don't want to go long. Not only this is a double bar entry, but more importantly, this push down was too steep. Okay, it was too steep of a push. There can easily be drawn wider downtrend. So I need first some push above EMA. And downtrend continues to work lower like this. So because the push down is too steep and too consistent, what we're going to do, we're going to widen the channel something like this, because it still basically looks like a one clean push working lower. What if there's going to be some high probability setup at the EMA, let's say second entry short? Can I take it? I don't want to take it because if I'm going to zoom out, we've been in a trend range the whole time. And it's very likely for breakout to fail and for us to go back into the initial trend range. So I'm very patient throughout areas like these, because even breakout pullback is not fully sufficient. In order for you to sell, you need this scale holding and something below EMA or reversal back into the trend range. But this is conflicting area because we were in the trend range the whole time. So you have to remain patient here, and you really want to make sure the market is going to tell you everything about its intentions. Break a new high, uptrend played out. Okay, two-legged pullback again, market moves in pairs of twos. And we're breaking below the EMA, so this is now really giving us confidence. Okay, it looks like the two-legged pullback played out. The support is transforming into resistance, which is what we call a breakout pullback pattern. Sellers are stepping into this market throughout this area, and it confirms that this downtrend that we traded down needs to get new low tested. Now we have new high, first entry long, pullback, second entry long failure. We have a failed second entry long, great signal bar. It is a decent setup. I didn't take it because personally I was quite still unsure whether we're going to go back into the trend range or not. This downtrend wasn't sufficient enough. And also I can draw small short-term trend like this, and you can see you have small overshoot. So this is why this failed second entry long can be a little bit more aggressive, but I'm going to mark it as a decent setup to consider. As a failed second entry long, gray bar, chances are high we're going to continue working lower. I was looking for a second entry short. This failed second entry long ended up stopping you by one tick. Not that big of a deal. It looks like this was a little bit of a fake out trap, but now I'm gonna mark this as a second entry short because we have a new low, first entry short, second entry short. But the signal bar ended with one tick bullish body. Now the tail is enormous. There's a massive selling pressure towards the close. Now I didn't take this one as well, given the body here. I wanted to see at least doji body, but there's such a nice reversal. It is a second entry short. It is even stronger than this. And now you know that this was probably a fake out trap. And now you're really going to pull market lower. So this is a decent setup. I'm going to mark it a little bit more aggressive because the signal bar is not fully that perfect. but one tick bullish body is not that terrible. Now we have a lower high again, but it's to my liking a little bit too close to these lows, so it's better to be patient. And downtrend played out with the break and new extreme. So now I have to pause, looking to go short. You have a failed second entry short above EMA, but I can't take it because it's quite congested. You're buying at the very top of the move, and we mainly form the failed second entry short below EMA. You prefer the second entry short to form above EMA, so you can have the EMA as a support. So if I'm thinking about buying, I want to see some proven uptrend first. Okay, and this was confusing. Why market turned down like this and we keep working lower again? Okay, so at this point, I'm really patient because I can't really draw wider downtrend like this. It's too early for me to do this because we have such a steep leg down, broad pullback, push to new extreme. So I'm just going to be patiently waiting. I'm not really thinking about buying nor selling. This is mainly area of development. So I'm just waiting here, not really thinking about anything because we're simply going too sideways for me to draw any broader channel. Nothing feels that great. At the same time, all uptrends played out. There is no good broader channel, so we're just going sideways. Okay, I'm literally not even looking for setups when I'm watching this live because there is no good trend to be confirmed. It's not even acting as a trend range. This is area of development. You have to remain patient. It's hard because it took almost an hour of you just sitting here and watching this, basically just sideways price action without a bias. But all uptrends played out, so I can't be thinking about buying. And like I said, this was too broad for me to be drawing any wider channel. Nothing feels that great so far, so I need a little bit more information to work with. And market finally traded down like this. Okay, so finally now we have new information, what's happening in the market. We have significant push phase down, and once I saw this, I have to right now start looking for some channel because after breaking new low of our initial channel, prices still are very bearish. It's not easy structure to find good downtrend because it's too sideways, but I like drawing something like this. Copy it, put it at the bottom. It's not the best fitting spike in a channel pattern, but I have to work with the price action I'm being offered, not the price action I want. So this keeps me away from buying. It helps me to trust more shorts. I'm going to redraw the short-term uptrend. We have overshoot, however. I mean, this is decent setup. There is some resistance. This is a second entry short. But problem is, we had overshoot and also it's gigantic. It's actually only 4.25. The ATR really went down, so it's not even that big of a bar, especially if you use some limit order. 3.5 points, 3 points back. It's actually normal size, but the overshoot messing things up. You know, we expect new low. Wider downtrend seems to be valid, but it is not easy trade to pull the trigger. You know, maybe if you're aggressive, but you know, especially after overshoot, I need at least some lower high. Now this formed, and we have massive push down. So because this spike kind of channel was already too flat to begin with, and you have such a massive push down, this doesn't really look like overshoot, especially on a 10,000 tick chart. It looks like there is just steeper channel, something like this. You can see this fits pretty well. Fits also on 10,000 tick chart. So right now what I'm going to do, I'm still thinking bearish. This is still looking like we have definitely bearish trend in play. Let's see what's going to happen. But now we have overshoot even for this channel. Okay, we had confirmations of these lows, but I have another push down. So as you can see, I'm getting bounce here, and bounce here. So I have 3 confirmations, and now one broke the trend channel line. So it really looks like oversold area. You can see how we spike down. Market cannot continue working lower indefinitely. There needs to be equilibrium. This is too steep of a push down. So right now I'm gonna respect this as overshoot, and I'm not gonna take any short setup in the near future. Okay, we're going too sideways. I'm not thinking about selling. I'm not thinking about buying. Gotta be careful. We had overshoot, oversold area. I expect, honestly, the break of the trend, the break of a trend line. I'm gonna draw a small correction, actually a small trailing range like this. Okay, now when I was watching this, I was expecting, okay, we finally have some momentum, break a new high, and then fell second entry long below EMA to test the new low. But market reversed down already. Okay, a lower high, kind of in no man's land. Yes, confirming the failed breakout. Once again, most breakouts will fail. This is a small consolidation. And now that we broke lower again, failed second entry long can be decent because the market is telling me it's too bearish. You can't even break the trend line and you're back below the EMA, back into the strength range. This is a good sign. Okay, looks like a brand new push phase is about to start now. So failed second entry long could be decent. But the signal bar is horrible. I cannot sell though. This bar, inside bar. And market just continues to work lower. So what I have to do is I have to widen this channel because it's not acting as overshoot. But you can see you have to navigate the market when you're watching this live, following the rules. Because it looks like overshoot when you're watching this real time. It helps you to stay away from these short opportunities after overextended push phase. But now the market continues to go lower. I can adapt and admit, okay, there's broader channel in play. And in fact, on 10,000 tick chart, it looks like wider downtrend is in play. So right now the trend down is the pattern and I want to think about short opportunities, but I have to redraw the short-term trends. I'm going to connect the lows here. I have a second entry short, but I have uptrend in place, so I cannot go short just yet. I'm respecting these corrections every single time. Okay, breaking above EMA. I need some lower high, no nothing. Okay, market is working lower. We're so far from the EMA, I cannot take anything, I need something closer to the EMA. Market is correcting, working higher. Okay, lower high, actually new low, first entry short, second entry short would be sufficient because at this point we've been working lower the entire day. Trend down is quite decent, established, but the signal bar is too weak. Bullish body, one tick, quite doji-ish. I can't justify taking this second entry short, unfortunately. But you can see once again, this is where the correction phase will end. I want to see push below EMA, brand new push phase may start. Failed second entry long would be good. I want to consider taking a failed second entry long, but there was no trigger. No trigger. And then this bar has one tick bullish body. So I can't take it. Even though it ended up working, nothing pretty much I can do. Then you have mini second entry short, but it's not even at the EMA with the tail alone the body. Now it's too congested. I don't like taking anything. Look at the congestion here. We're going so sideways. It feels like the push phase down happened without a chance for us to capitalize on this. Market is correcting. On 10,000 tick chart, this looks like we have beautiful two-legged pullback and the EMA keeps holding. You can see the visual two-legged pullback even here, and this is what we like. We like how broad these two legs are because it's negating any wider channel. Okay, so broad two legs, uptrend played out. The trend line is holding, push below EMA, so now we expect brand new push phase to start. Okay, and you may think, how are we gonna predict this? Will this happen every single time? And we don't know what's gonna happen. We just have to follow the rules, and we expect market to act like this, and 8 or 9 times out of 10, it's gonna behave exactly like this. Okay, we have two-legged pullback up, correction phase ended, and we expect brand new push phase to start. Okay, so because I have broad two legs, I have push below EMA, I expect brand new push phase to start. And I have lower high confirmation setup. It also can be treated sort of like a new high, first entry long, second entry long failure. But if you reset the count, this is basically a lower high. Either way, this is a great signal bar at the EMA, broad two legs up. This is a great high probability setup. This is exactly what it looks like when a brand new push phase is about to start. Great high probability setup, lower high, market drop lower, and look at this trade. What a spectacular push phase working lower. You can have some decent runner. Now I'm going to redraw a small short-term trend. I want to see some setup at the EMA before we're going to reach the new low. Okay, redraw the short-term up. I have now a slightly different bars now that I reloaded my data. We have another second entry short. Now this second entry short is not the greatest because the trend line is simply too ambiguous. Now the reason why this is tempting is because you can combine it with the failed breakout. You can see you have a consolidation, most breakouts will fail. But I really prefer in a situation like this, a lower high. I need something a little bit broader. At least, had it been a little bit broader, one more bar in between so we can really see the break, attempt to get the new high, push to a new high. But this is a little bit too seamless. And once again, it worked because we have a failed breakout here. So you can consider if you're more aggressive, not because it worked, but because you can combine it with the failed breakout. But it's better to wait for the lower high to be extra safe. Or if you're just slightly broader price action, No lower high. By the time I get lower high, it's already too far down. Not the EMA. The push down already happened. Okay, I'm gonna redraw a brand new uptrend. Working higher. Entry long. Second entry long failure. Never triggered. Had there been a trigger here, I don't want to take it because the uptrend didn't play out. So there's a chance we may reach the new high. Or they played out with the break push to a new extreme. Too much congestion, you back above EMA. I cannot sell now. It's above EMA. Congestion, terrible congestion. And given the fact that this uptrend doesn't have a new high, there can always be the leg up. So if I'm going to combine this with this, how terrible this looks, and it's too late, which means sellers can be taking profits. I can't take it. And now the market is about to close now. As a trader, you need to acquire the skill to understand when you're supposed to pull the trigger and when you're supposed to be patient. There are two major areas where you need to be patient. This one right here, before the main downtrend was established, so you really cannot be even thinking about setups because it's too unclear, nothing is confirmed. Then this area right here after overshoot, so two areas where you have to be patient, but pretty much once it breaks down, the downtrend is confirmed and you're just thinking about short opportunities. Break and the market is attempting to test the new extreme. So I hope you had a good trade. I'm going to wrap it up. I'm going to talk to you next time. Good luck in your trading.